Now from Baltic Capital Markets, Kathryn Rooney Vera. Kathryn, let's talk about this. I think the bill now is about $1.75 billion. Let's say it goes through. Where will the money come from, and what would that mean for the economy and the stock market?
Well, Senator Manchin thinks it's a bunch of gimmicks that's being used to finance this bill. It's not financed. I mean, we have some ideas on additional surtaxes, 5% on personal income above $10 million, 15% minimum tax on corporate profits, et cetera, a lot of taxes. But the fact is, Charles, that this is just going to add to our already enormous debt pile, which of course is $20 trillion. And we just continue to deficit finance ourselves, monetized by the U.S. Federal Reserve. So this is just more fuel to the fire in what is already an inflationary environment. Charles, I've been talking about inflation for about a year now as the real threat for 2021. And effectively, that's played out exactly as forecasted. Inflation is the real. And Charles, I'll add one more point. As inflation goes higher, the Fed is going to have to hike rates. Hiking rates increases the cost of financing that $20 trillion in debt. So it just gets uglier and uglier. And we have no plan to go back or take back any of the $2.5 trillion that we've already approved in Congress regarding COVID-related stimulus. We're just adding fuel to the fire here, Charles.
Well, speaking of fuel, if these bills are passed, there will be more money pouring into households, and it will exacerbate this inflation crisis. The questions from an investor point of view is, how do you protect your portfolio?
Yeah, you have to protect it with inflation hedged instruments. That's what we've been talking about in Baltic for some time. You can go long commodities. Commodities have flown. You can go long green energy. Green energy, Charles, in the past 1 month is up almost 30% because of this infrastructure, or not infrastructure. It's basically an environmentally charged spending package, because about half of it goes to green energy. You look at emerging markets. There's some subsectors of emerging markets which look interesting. You talked earlier about China. There's some value there. You can go into Chinese equities. You can look into consumer discretionary, and that kind of policy pivot by President Xi of the crackdown on real estate, crackdown on the financial sector, I think it has gone away. So we're going to see some more upside in Chinese equities, some Brazilian bonds. You can buy inflation and rate sensitive sectors in the U.S.
I got less than a minute, but let me ask you about yield in general. The S&P 500, I think it's about 1.3. The real yield is negative. The yield against inflation, against the CPI. So where does an American investor, find yield and yet sleep well at night?
Right. Yes, you find yields by going overseas. There's not much yields right here in the U.S., not in high yield bonds, not in high grade bonds. You can even go short duration, which is the shorter term paper, and you're not going to get a yield. So you can look at Petrobras bonds in Brazil, 6.2% yield. It's not too risky of a bet. There is some risk, of course, being emerging markets, but there you can get some yield. But you definitely want, if you're a U.S. focused investor, stay in the rate sensitive and interest and inflation sensitive sectors.
Kathryn, thank you very much. We covered a lot of ground. Thank you. Appreciate it. All right.